Alright, today we're going to be looking at IMAX Corporation, ticker symbol IMAX. As of today, the stock was trading around $53 a share, giving it a market cap then of just under $3 billion. So unless you've been living under a rock, I'm assuming you've heard of IMAX and understand and know what they do. But for anyone who's not too familiar with the company, they're effectively an asset-light premium cinema technology and licensing platform, whereby major titles released at the box office is attributable to IMAX screens of around 15 to 20% of their total, box office income on the opening weekend. Yet IMAX only actually reflects about just under 1% of total screens showing the movie. Of course, throughout the video, we'll go into why that is. But in terms of specifically then the products and services IMAX offers, their company is kind of broken down into two segments, which is the technology segment, where they sell things like projectors, sound systems for the theaters, and then the content solutions segment where they do like DMR remastering, which basically means just turning content into the IMAX platform and screen format. And then of course the box office participation, which is the main key driver in this thesis and what we'll be focusing most on this video. In terms of the thesis then, and the main reason for this video and while we're looking at the company, is what basically happened this summer, where we effectively saw a format level brand regime change. And what that effectively means is that via social media and what I'd call social arbitrage, we've seen a massive shift culturally in the cinema industry and the landscape of movies and cinema, I guess. And that is effectively this key identification and driver for premium large format screens, otherwise known as PLFs. Again, in later slides we'll kind of go into that, but I guess what was previously more of a niche topic and experience that most, I guess, only hardcore cinema goers would only think about and enjoy, which is things like 70mm film or even 35mm film, and then at different aspect ratios and things like that. You know, before 2026, this was very, very much a niche subject and topic. However, over the summer now, we've seen a massive shift in the average consumer that is fully now aware of this, thanks in large to social media like Twitter and Instagram. So you kind of see the meme here with the Odyssey release. The difference between the 70mm IMAX and the normal theatre experience gets across the point very well, which is in this scene here with Agamemnon. You can see his helmet pretty much cut off in the normal theatre experience, where you can't see the helmet, whereas then in the 70mm IMAX version, you can see the full screen and see the full picture, with the meme of course being as Nolan intended, which for the Odyssey then has been the main meme driver, I guess you could say. But what we've effectively seen is the last two Nolan movies then going pretty much viral on social media thanks to memes. And of course in 2023 then with Oppenheimer, it was the whole Barbenheimer meme and craze, right? The difference between the grey and the pink juxtaposition between the two films, you know, how one is super serious about the advent of nuclear bombs versus obviously a Barbie film. And then, you know, I guess the meme of them releasing on the same day and then going to watch both on the same day. But of course the whole virality around that movie had pretty much nothing to do with IMAX. Of course, IMAX saw a massive bump up in sales and in recognition. But yeah, the overall discourse online had nothing to really do with IMAX. It was all to do with the Barbenheimer meme. Whereas this time with Nolan's release in 26, with the Odyssey, the main memes and the virality around the movie are pretty much all to do and linked with IMAX and the screen format of the fact that, you know, poor people effectively can't see the full image versus people who are fortunate enough to get access to the 70mm version in very select theaters around the world. Again, I think there's only like 41. They can see the full image, have the best sound, all these kind of things. And so the virality and meme linked to the Odyssey is completely directly linked with IMAX and what they can offer. And this has effectively created a cultural shift with the IMAX branding and its perception around the world. And I guess the main thesis then, or the point of this video, is I believe while some of this has been priced in, specifically the Odyssey's box office success, you know, I think it's generated over $300 million now for IMAX alone in terms of box office, like gross revenue, sorry. What hasn't been priced in is, again, what I've mentioned previously, but the cultural shift and effectively the social arbitrage aspect of the trade. This has effectively created a secular shift in the industry towards PLFs, you know, premium large format screens, and more importantly, the business opportunities this has potentially created for the IMAX brand, which again, I kind of mentioned here with the B2C, so business to consumer optionality, where they could potentially now use this really strong branding to sell directly to consumers different products and services, which again we'll get more into in part 2 of this analysis. Part 1, which is going to focus more on the current business. So focusing on the sector then, and then the premium large format. And effectively what we're already seeing, to be fair, is the increase of the premium large format's share of North American box office. So just before COVID then, the final normal year you could say in cinema, we saw PLFs have about 10% contribution of the total box office in North America. And then just in 2024, we saw that massively increase then to 15.6%. In terms of forecasting and total addressable markets, so the global PLF market is forecasted to grow to $4 billion by 2034. I personally think it probably achieves that a bit earlier now, but even with this more prudent forecast, it implies then a 9.2% CAGR, or compounded annual growth rate, which when you factor in a 9.2% annual growth rate in a structurally declining business or industry, which is a cinema industry, I believe it's been declining since the 1980s, to achieve a 9.2% annual growth rate within that kind of environment, I think is pretty incredible and something to definitely take notice of. In terms of IMAX themselves then, they have around 50% of the global premium cinema locations, and it is pretty much the premium tier's default brand, right? When you want to watch a movie on a bigger screen than normal versus normal cinema screen, the first thing the most people's minds will go to is IMAX. In terms of network runway and potential growth, I think IMAX so far have pretty much focused on North America and China as their two main regions. So places like South America, there's massive growth opportunity, and of course still in Europe and other parts of Asia. In terms of the competitive landscape then and other competitors, again, if you're more familiar with the cinema industry and the PLF industry in particular, then the main competitor only really is Dolby. Of course, Dolby do more than just PLFs, right? They do consumer products like sound systems and things like that. That being said, however, one thing you need to realize with Dolby Cinema in particular, obviously here you kind of see it's ranked number 1 in terms of best picture and sound quality, is there's very few of these real Dolby cinemas in the world. Kind of similar to the 70mm IMAX, only having 41 as of the Odyssey release around the world. In terms of Dolby cinemas, there's I think around 170 and just in generals, right? So of course IMAX has 1800 when you factor in all the different categories and tiers of IMAXs around the world. There are of course alternatives where they use Dolby technology. So you have the HDR by Barco, or I guess more specifically in the UK, we have the View Epic screens. So View is a cinema chain here, and their Epic brand uses Dolby technology, specifically the audio, I believe. And then the HDR by Barco is like another company that provides, I guess, the HDR color quality and screen quality. And to be honest, it's actually nothing too impressive. It's an incremental improvement to like a typical or normal cinema screen, but it's nothing incredible and nothing innovative or revolutionary in my opinion. But what I have found personally, my personal experience, even the typical Limaxes, which is what people would call the commercial laser, I find that to be significantly better than most other PLFs. Viewed Screen X, I've viewed again View Epic, all the other PLFs that all the other cinemas provide, and to be honest, most of the times it's been a very underwhelming experience, where the only benefit, which I've kind of mentioned here, is like the reclining seats. There's more space and more comfier seats in the cinema, so it's more of a luxurious experience in terms, or more premium experience in that sense. I feel like IMAX is an actual true evolution, or at the very least a differentiator to the typical cinema screen and a typical cinema experience. And I think the best point to get that across then is the fact that every rival screen is pretty much capped at 2.39 to 1 scope, so the typical letterbox cinema format and aspect ratio. And it's only really IMAX that provides an expanded ratio for content and movies in either, like I said, their 1.9, which is called the Limax format, or the 1.3 format, where you're seeing more of the screen, or at least a more boxier look, which again I think can't be underestimated in an industry which has really lacked innovation. The last 20-30 years since it's moved to digital has effectively not changed. I remember the 20-25 years ago as a kid going to cinema, and and the experience effectively being the same. In terms of the peer comps then, so if you watch any of my other videos, you know I usually like to do quite significant in-depth peer comps. Fortunately here you can't do too much because again the main competitor or publicly traded competitor is Dolby. You then have Sphere, which we've not actually talked too much about. It's not entirely comparable because they only have one massive screen and one massive event at the moment. I believe they're expanding, but yeah, they're much more niche and just a completely different business. There's also then a subsidiary under that does like TV and things like that, so it's not that it's not that comparable. And then of course you have like this cinema exhibitors like AMC who actually then provide the screen, but you could basically call them more partners than competitors really. So it's quite difficult to do a sector comp. Of course, compared to these companies, you can clearly see that IMAX is already trading at a fair premium, to be fair, on both sales and earnings. It's definitely recognized by the market as a premium company versus competitors and versus companies within the same industry and sector. And yeah, you can kind of see my more full analysis here, some more of the other companies, and yeah, they're pretty much at premium to everyone except for I believe Netflix. So you can kind of see here pretty much the same forward EV to sales, slightly less, and then a higher forward PE ratio. Of course, when you factor in the growth they're having, they actually have a lower PEG ratio than someone like Dolby, for instance, who have a PEG ratio around 7. Although again, I think the earnings growth projected for Dolby at 2% is very, very low and being underestimated by I say being underestimated by investors, but clearly not, given the fact it has a 7 PEG ratio. But yeah, we won't go too in depth on that. If you of course want this full analysis for yourself, you can always grab it down below in the description. Always forget to mention that. But yeah, so in terms of empirical evidence then outside of the financials, again, as I've kind of mentioned already, this is more of a social arb trade rather than a deep value play, but based on fundamentals. You know, we're kind of trading the fact that Wall Street and normal investors haven't really caught on the secular change occurring here. But one of the best empirical evidences of this social arb trade is via Google Trends, and using the keyword search of IMAX around the world, you kind of see a massive difference between Oppenheimer's spike, which was also in July 23, which on the index hit around 46, and then the Odyssey, which hit all-time highs ever for IMAX, where obviously it will be at 100, and then that implies a more than 2x spike, or at least a 2x increase in searches for IMAX versus Oppenheimer's release. So I feel like this graph here, which is also the next one, kind of best indicates and showcases the difference between previously and now, and why this time, I believe anyway, is different and will cause long-term secular shifts in consumer behavior and trends going forward when it comes to PLFs. So you can kind of see here the Oppenheimer spike, which of course now with the Odyssey spike doesn't look that impressive, but of course at the time was pretty impressive. And then yeah, the Odyssey spike here, and which in fact, if you then zoom out to the all-time data, which I'm doing here, so back to 2004 when Google Trends started looking at this information, you can see it's not just the last 5 years it hit all-time highs, but yeah, all-time highs throughout the history since the data started being tracked. So the previous high was of course Avatar. So Avatar IMAX hit around 79 on the index score, and of course, yes, beat that now by 20 index points, which of course, if you know anything about IMAX stock, when Avatar came out, that's when it hit another all-time high previously, while of course Avatar was a massive help to IMAX at the time, and again created another structural shift and secular change for the business. Of course, social media wasn't around to the level it is today, and so it wasn't able to sustain or kind of get that different brand perception for the company. And then of course a couple other points I mentioned, which I'm sure everyone knows, but yeah, the 70mm IMAX seats were sold a year out in advance, so incredible demand for very limited supply. Resale tickets were then going for incredibly stupid amounts of money, anywhere between $400 to $1,500. And we've already mentioned the fact that 20% of Odyssey's global opening weekend was earned on less than 1% of screens. So I previously kind of mentioned and hinted there was a takeover optionality and acquisition by some potential big players. So earlier this year, before obviously the whole Odyssey craze kicked off around May 2026, the Wall Street Journal and CNBC reported that IMAX had engaged advisors about inbound sale or potentially selling the company and taking it private. So obviously these talks were preliminary, nothing guaranteed or things like that, but at the time the stock was trading around $39 a share. So of course today it's trading at $50 a share. But what effectively this implies then is the fact that there was significant interest at the time of taking the company private and acquiring the company when it was trading around $39 a share. Typically, we see a 20% premium paid, anywhere between 20% to obviously higher, but usually 20% premium paid on the current stock's trading price is very normal, and that would then apply a stock price of just under $50 that it potentially could have been taken private. So the fact now that the company's trading at pretty much $50 a share, to me implies a pretty limited downside and a very attractive risk to reward ratio for this company and stock. Coming on to the bear case then, and in terms of what has to be respected and acknowledged, of course, whenever you want to invest or trade anything, you need to understand the downside risk to that. There's four main key points that I'd like to get across before anyone thinks about investing or buying IMAX. The first one is a pretty big one actually, which is the fact that the CEO, Richard Gelfand, is selling heavily, especially the last few days and weeks when the stock has obviously bumped up quite a lot as of the Odyssey release to $50 a share. He's been selling quite a lot now the last few weeks. That being said, he was also actually selling quite heavily back in April and May, I believe, when the stock was trading around $39 a share. So you can never know what someone's personal life or outside of, their actual thoughts on the business and company is. Maybe he's selling quite a lot of shares to raise funds for something else. Maybe he just wants to cash out. But of course, it's always concerning and a bit annoying when you have the best operating month in the company's history, in July and August, and then your CEO is selling shares when effectively there's been a cultural and marketing brand shift, you'd say, for the company. And the last thing, in my opinion, you'd want to be doing is selling shares, but rather focusing on how you could take advantage of the new opportunities given to you, which again in part 2 of this video series and analysis we get onto in terms of how I believe you can pretty much 3 to 4x the IMAX business and the market cap to around $3 billion to $10 billion pretty easily actually. And so the fact that the CEO isn't more focused on doing that rather than just, I guess, running out of the back door and selling all his shares is concerning, is a bit annoying, does make me a bit wary. The fact that management maybe doesn't have the vision and the ambition to take it where I believe the company can go. But like I say, we'll get onto that in part 2 of the video series and talk about it a bit more in depth. Another point then is the cyclicality of the business in terms of the slate and the box office. Always going to be what I'd call as air pockets between major releases. So at the moment, it's not too bad, where obviously the Odyssey is having fantastic success, along with Spider-Man. You'll then have some decent releases in October, November, nothing crazy. And then, of course, in Dune, you have a massive release coming out specifically for IMAX. And then once that 3-week exclusivity deal is finished in January, you'll then have Doomsday, obviously the Avengers Doomsday, coming out on IMAX screens in Jan-Feb time as well. So for the foreseeable future, it looks pretty strong. But of course, all it takes in this business is some pretty bad or no releases in general for a lot of the box office revenue to dry up. And so it's very dependent on good content and good movies coming out. So that's definitely something to keep in mind, is the cyclicality of the business. Third point then is the fact that 70mm film specifically cannot scale. So as I mentioned, there's only 41 film capable screens worldwide. And by film, what I mean is literal physical film, which is then projected to the cinema screen. As you'd expect, this is pretty much a dying business. A lot of the business is going digital, and what we're seeing with film is more of a niche and more of a, I guess, novelty. However, what is good about that, on the flip side, is then it's kind of being used as a marketing tool by IMAX to show themselves as a more premium and novel brand in the first place. But then the fact that then the majority of their screens is actually digital and not even the 1.43 screen format, a lot of the average cinema goers and consumers actually have no idea between the difference of the two in terms of digital and film, or the different screen format sizes. And so actually, while it is kind of a bare thesis or a bare point to flag, is that you can't scale the most premium aspect of the business, on the flip side is a lot of consumers actually have no idea, and they'll go to a normal IMAX screen or 1.9:1 format, still have very good audio and come away blown away and really have enjoyed the experience. So it's nothing too crazy, but again, something worth keeping in mind. And then the final point I wanted to flag then, of course, is the China exposure. So the most IMAX screens around the world is actually in China. I believe it's around 800 IMAX screens. There's significant China exposure, which of course then comes with a plethora of issues like geopolitical issues, regulatory overhang, and of course the Chinese economy is a bit shaky at the moment, which to be fair, a lot of economies are. But of course, we're seeing very, very uneven box office revenues in China, where last year we saw massive increase in revenue. They had a really big like China domestic releases, like actual Chinese movies, which were massively popular. And then this year, especially the Q1 and Q2 this year, it was pretty much dead. So really, really cyclical, super uneven, especially in China. So that's obviously something also to factor in if you're doing any modeling, DCF models and things like that, is that they're, again, the China exposure is significant and very, very temperamental. In terms of upcoming catalysts then, there's two main ones this year I've already mentioned, but Q3 26 in late October. Ideally, we want to see the incredible summit success the company has had printed into the earnings and revenue, which I'm pretty sure we'll see. Hopefully, we see a guidance increase maybe, and more talk on about 2027 plans and hopefully how they plan on capitalizing on the incredible success they've had this summer. And then, of course, the next catalyst being the Dune 3 opening weekend and release in the end of December. So keep an eye on those numbers, see how they perform, especially specifically IMAX in relation to the release, in terms of people who then go to watch Dune in the cinemas, whether or not they go into IMAX specific screens. I think they will. We're already seeing the 70mm versions of the Dune 3 release sell out already, and a lot of buzz on social media specifically to do with the IMAX release and aspect of the Dune 3 release. And finally then, we have a fair value and price target as always, so I won't go too much into this, but yeah, I personally have an FY27 price target of around $68 a share, so implying a 30% upside. That, of course, you can kind of see the table here is derived from 4 different aspects. So 2 is basically based on the current market valuations of the company. So if you held the PE ratio of 45, based on the FY27 EPS projections I have, gives around a $61 share price. So I've given that a 25% probability. Similar thing for the sales multiple. If you held it around a 6 sales multiple to the projected sales I have in 27 of 532 million, you get a price target of around $58 a share. Of course, this is the DCF model then. I won't go too much in depth in this specific video. Maybe in a later video in the series, I'll make a video specifically for the DCF model. But you can kind of see the base case then spits out a fair value price target of $62 as of today. And the bull case, or the ultra bull case, in terms of if I believe, which is effectively if they achieve what I believe they can do in part 2, which will be the business analysis and how they can basically make the company 3-4x and go to a $10+ billion company, gives an implied DCF share price value of $136. So of course, with the base case view, I've given 40%, so the majority probability to that. And then the ultra bull case, which again we'll talk more in depth about in the next video, I've given only a 10% probability to that, because again, management aren't exciting me and giving me too much hope. But I am also hoping a lot of active investors see the business within the next few months and kind of pick up on the fact that management maybe aren't competent enough to take advantage of the current situation. But anyway, I've given that 10%. Add those averages up is what then spits out the $68 per share price target. And so the final verdict then, final slide, is I personally am going along the underlying equity, and it's more of a buy and hold. So unfortunately, it's not really a short-term trade. You can't really use options. And the reason for that is there's no discernible and really identifiable catalyst that you can trade against and trade to. Normally, with a lot of my trades, you'll find there's a specific catalyst or a specific event that I believe will push the stock a certain way. With IMAX, it's not as definitive, unfortunately. With these social arb trades, unless you can identify the specific event, it's more of just a buy and hold, especially when you factor in the takeover premium. That can happen at any time overnight. So for instance, if you were to buy call options to Jan 27, but then in Feb 27, the takeover options, the takeover talks ramp up again, then you've completely missed out. And so there's little things like that where it's pretty tough to trade it via options. And so I think a much cleaner expression of that then is to buy the underlying equity, hold it for at least the next year, I believe, and let the news cycle do its job in terms of all the potential expansions they can have. So like I mentioned with the B2C layer, so the consumer layer, we could see an expansion in 4K Blu-rays where the IMAX specific aspect ratio, I'm already seeing massive craze and buzz and YouTube videos on that where a lot of consumers are asking for the Odyssey to be released in the 1.43 by 1 aspect ratio. There's also then maybe some long-term aspects they could announce in terms of IMAX specific TVs, effectively box TVs, which is quite funny, which again we'll get onto in part 2 of the analysis and the video. And then there's also, like I said, other news cycles where top filmmakers are increasingly becoming IMAX native. So of course you have Chris Nolan, but then you have Denis Villeneuve, which is the Dune creator, or the Dune director, sorry. You also then have Ryan Coogler, who of course made Sinners last year. And so more and more we're seeing the best and the biggest filmmakers around the world kind of latch onto IMAX and utilize the camera more specifically, which is then of course results in IMAX specific viewings. And of course, publishers like Warner Brothers, Disney, Universal are also catching on to the fact that IMAX helps boost revenues. So I also believe a lot of the publishers and distributors will push their filmmakers to start using more IMAX adjacent cameras. But yeah, I think that's the video there. Kind of went on for much longer than I was hoping. As always, if you have any questions, do leave them down below in the comments. Otherwise, until next time.